Hello everyone, welcome to the Ichimoku daily analysis for the SP 500 for Thursday, February the 25th, 2010. Well, there's a small green body candle today, and the small green body tells us that the buyers have made a small amount of net bullish progress on the day between the open and the close. Certainly a much smaller amount than the previous day. The interesting thing about this candle is the very long shadow on the bottom of the very small body, and that suggests very strong upside price rejection by the bulls as the market sold off, traded outside of the cloud, which was quite negative at the time for the market. The buyers found support at the Tenkan-sen and came back with great force to close the market up towards the high of the day. That's telling us that between the trading range between the high and the low for the day, the bulls have closed in control of this market, and they've shown some fairly strong commitment to taking this market higher throughout the day. Obviously the bears lost any commitment that they had as the market traded down below the cloud or the Kumo. Now the close is just below the previous close, and that does show some weakness. It's telling us that the bears were slightly keener than the bulls. The bulls really didn't show any keenness in this market, but the amount of keenness that the bears exhibited was rather small anyway. The market is still in a first time frame downtrend. The first time frame downtrend began 2 trading periods ago, and yesterday we had a hook type reversal with an inside day type bar, which didn't change the trend. And today, when we compare the high and the low of the current candle to the previous, we have a lower high and a lower low, so we have a downtrend still in place. For this downtrend to continue, obviously the area around the bottom of the cloud, around 1095, becomes very important for this market. It will need to trade down below there and close solidly down below there if the market is to trade to the downside further than it has previously. There is potential support, as we've said, offered by the Tenkan-sen at 1087, and then certainly at the 1080 region where we had a previous area of support and resistance, a potential area for very strong support. If the market trades down below that, then there is suggested strong support all the way down through to 1060 and then to 1040. You can see excuse me, the large shadows on the bottom of these candles as the market traded to these areas and the buyers came in and were buying the market back up. So there is very strong potential for support around those areas. Now if the market does trade to the upside, obviously this 1108 region is a very important barrier for this market, and certainly this minor swing high at around 1112 where we had the previous tweezers top reversal pattern. That's a very strong area of resistance. There is resistance, however, all the way through the cloud or the Kumo, and that extends all the way up to around the 1130 region, roughly in an area where there was previous resistance as well at the 1132 area. So anywhere within this zone, the market may find a resistance and potentially fail to trade up through there and potentially sell off. Now the market is trading within the cloud or the Kumo, so we do still have a neutral market, so we do need to be aware of that, and any trades that may be taken while the market's trading within that area are certainly not as strong as those of the markets trading up above. The market is, however, trading up above the Kijun-sen and Tenkan-sen, which means that the market is bullish in the medium and short-term time frames. A negative factor for this market, though, is the fact that the Tenkan-sen is below the Kijun-sen, and that's negative in terms of these indicators. So we're getting quite some mixed signals here. We're getting a candle with a small body but a very large shadow, showing a good deal of support, and a market trading within the cloud, which is essentially neutral in the longer term time frame.